What's up, everybody? Shannon Young here. If you're thinking about buying, selling, or refinancing, or you're a real estate pro trying to serve your clients better, you're in the right place. I packed a bunch of questions I get asked most into this one video. We're covering fall market timing, insurance surprises that can wreck a pre-approval, cash out refinances, getting your finances buyer ready, investment properties, and DSCR loans, why a screenshot of your bank statement won't cut it, and the truth about waiting for rates to drop, and one about builders' preferred lenders that gets a little spicy. Grab a coffee, drop me a comment if something hits home, and let's get into it. And yeah, I'm a real person, not AI. Same energy I bring into every client. Let's roll. Fall inventory shifts. A lot of buyers think spring is the only time to shop, but fall can actually work in your favor. There's less competition since a lot of buyers have already made their move for the year, which means more room to negotiate on price, closing costs, or even repairs. If you've been priced out or outbid earlier this year, this could be a very good window to jump back in. Thinking the market has cooled off because it's fall? That might work in your favor. Less competition equals more negotiating power on price and closing costs. If you sat out the spring rush, now might be your window. DM me to talk strategy. Let me know when you think the best time to buy is. Could be any time. Also, follow along on other platforms. I do have Instagram at shannonyoung.fsu, and I'm a huge Seminole fan on X. Want to get pre-approved today? Loansforknowles.com, and let's roll into the next topic. One thing that's catching a lot of Florida buyers off guard right now is homeowners insurance. Premiums have gone up so much that they are actually affecting how much home you can qualify for, because that cost gets factored into your debt to income ratio. I always recommend getting an insurance quote early in the process, not after you're under contract, so there are no surprises at underwriting. Florida buyers, your insurance quote isn't just a monthly bill. It directly impacts your loan approval. Rising premiums are affecting DTI ratios and derailing pre-approvals late in the process. Get your insurance quote early, not after you're under contract. Ask me who I recommend. I enjoy having discussions in the comments below. Keep in mind, you can follow along with me and other platforms like Instagram, X, or see me dance on TikTok. Just kidding. I haven't started dancing yet. If I get enough comments asking, maybe I will. Let's get into the next topic. If you're carrying high interest credit card or personal loan debt, a cash out refinance can lower your monthly payments by rolling that debt into your mortgage. But it's not a magic fix. You're stretching that debt out over 30 years. There are other closing costs involved, and you're using up equity in your home. I like to walk clients through the real numbers so they can decide if it actually makes sense for their situation, not just take the lower payment at face value. Are you drowning in high interest debt? A cash out refinance can help, but it's not a one-size-fits-all fix. You get lower monthly payments. Debt is stretched out over 30 years. Closing costs and reduced home equity. Let's run your numbers before you decide. Link in the bio, DM me. Also, if you want to get it going right now and don't want to wait for a comment response, go to loansforknowles.com and let's run the numbers. If you're planning to buy in the first quarter of next year, now is the time to get your financial house in order. That means holding off on big purchases, not opening new credit cards or loans, and avoiding job changes if you can help it. Lenders check your credit right up until closing. Don't let a holiday purchase cost you your loan approval. If these help even one person, I'm happy. Let me know if it helped you. I'm a real person. I see all the comments, and I love being there for home buyers, sellers, and real estate professionals. Want to get pre-approved? Go to loansforknowles.com. I'll contact you today. Our next topic is a fun one if you already own a home. Fall is when a lot of people start thinking about a winter getaway or a rental property before the spring rush hits. Financing is different from a primary residence. Down payments are usually higher and rates can be a bit different. For investors, DSCR loans are worth knowing about. Instead of qualifying based on your personal income and tax returns, the loan is approved based on the property's rental income potential. That opens a door for a lot of self-employed borrowers or people who already have several properties that don't fit into the traditional debt-to-income box. Thinking about a winter home or rental property before the spring rush? Financing works differently than your primary residence. And if you're an investor, DSCR loans might be your best friend. Qualify based on the property's rental income, not your personal income. It's a great option for self-employed borrowers or seasoned investors. Let's talk options. It's a buyer's market. That means it's a great time to use your equity. Have you done this? How did it go? Comment below so that other people can learn. Want to discuss your scenario? I'll run the numbers for you today. Just go to loansforknowles.com. I'm going to roll out a few personal favorite topics next. So if you're enjoying this, drop me a comment or share this video with someone. Want to be in a future video? I want to interview real estate professionals about these topics. Here's our next topic. I get this question a lot, so let me explain. Lenders need statements that come directly from your bank, either the official PDF you download from your online banking portal or a paper statement mailed to you. Here's why a screenshot doesn't work. Screenshots can be edited. Even if you didn't touch a thing, a screenshot is basically just an image. Anyone with basic photo editing tools could alter numbers, dates, or balances. Underwriters can't verify it's untampered. They're also missing key information. Official statements include your bank's letterhead, account number, routing information, and often a page count, like page 1 of 4. So the underwriter knows nothing's missing. A screenshot usually cuts all of that out. Next, investor and compliance requirements. Most loans get sold to investors, such as Fannie Mae, Freddie Mac, etc., and they have strict documentation standards. Underwriters have to follow those guidelines. It's not optional, even if they trust you personally. Fraud prevention. Mortgage fraud involving altered bank statements is common enough that lenders have to treat every file the same way, regardless of how much they trust the applicant. The good news? Pulling the real PDF statement is usually just as easy as a screenshot. Log into your bank's website, go to Statements and Documents, and download the official PDF for each month we need. If it's a joint account, make sure all the pages come through, even the blank ones. 4 major tips to save you time and headache. Of course, this information is first and foremost for my clients because I believe in carrying the same level of urgency they have about the purchase of a home. However, if this helps one person and we don't do business, that's still a win for me. Real estate professionals, please share this with your customers. Circle back and comment below if it helps to speed up the process for you or a buyer. Want to get pre-approved today? Go to loansforknowles.com. The next one is a big topic, and it's up to mortgage advisors like me who have the experience to explain it. Let's get into it. Everyone's waiting for mortgage rates to drop before they buy a house. I'm going to tell you why that's a mistake, and it's not what you think. Look, I get it. Nobody wants to lock in a rate today if it might be lower next year. That makes sense on paper. But here's what most buyers don't factor in. When rates drop, more buyers jump back into the market. More buyers means more competition. More competition means bidding wars. And bidding wars push home prices up. So let's say rates drop a point next year, but the home you want jumps $30,000 because 5 other buyers came off the sidelines at the same time. Did you actually win? Here's the move smart buyers are making right now. Buy the house at today's price. Take today's rate, even if it's not your dream rate, and refinance later if rates drop. That's it. It's a whole strategy. Marry the house, date the rate. You lock in the price, you lock in the equity growth, and you keep the rate flexible. You're in your home and gaining all of that appreciation while every other buyer is fighting the competition for the homes around you. Every month you wait is a month you're not building equity. It's a month of paying someone else's mortgage instead of your own. And if home values keep climbing while you're waiting for the perfect rate, you're not saving money. You're paying more for the exact same house just later. If you're on the fence, waiting for rates to drop, let's actually run your numbers. What buying a house today looks like versus waiting a year. Sometimes waiting makes sense. Sometimes it costs you 5 figures. You won't know until you look at your numbers. Drop a comment with rates and I'll walk you through it. And if this helped, follow for more no BS mortgage talk. We can connect on Instagram. I'm all about FSU football and real estate stuff on X. And I love YouTube because it all helps us learn and grow together. If you have an idea for a future topic, comment below with it. If you need a same-day approval, go to loansforknowles.com and I will personally help you. I'm not AI. I'm a mortgage advisor. Now, let's roll into the next topic. It's the final one and get spicy. Builders will dangle a $10,000 credit to get you to use their lender. I'm going to tell you why that deal is usually not as good as it looks and why you should shop it yourself. The builder's lender isn't working for you. They're working for the builder. Every part of that relationship is designed to close the deal on the builder's terms, not get you the best loan. Here's what that costs you. The moment you commit to the builder's lender, you kill your own negotiating power. There's no competition pushing them to sharpen their rate because they already know you're likely to take the path of least resistance. If you don't get at least 2 or 3 outside quotes, you have zero way of knowing if that preferred rate is actually good or just average, wrapped up in a shiny incentive. That $10,000 credit for using their lender, it's often already baked into the deal structure. It's a marketing frame, not a gift. Ask the builder directly. If I use my own lender, will you still apply the same credit towards the price? A lot of time, yes. Most buyers never ask. And they leave money on the table by assuming the incentive only exists through the in-house lender. The builder's lender reports to the builder's sales goals. That creates pressure to close fast and keep the construction schedule and financing numbers on track, even if slowing down or renegotiating terms would actually serve you better. In-house lenders run a narrow menu of loan products because they're built for volume, not for your specific situation. Need a construction to perm loan, a unique down payment program, a physician loan, or something outside the standard box? An outside lender shopping multiple channels almost always has more paths to get you approved on better terms. Builder lenders process a massive volume of loans tied to that one community. You're not getting someone fighting for your numbers. You're getting processed. An independent lender who wants your business has to earn it, which means better service and more accountability to you. Bottom line, always get an outside quote before you sign anything with the builder's lender. Even if you end up going with them, you'll know you're getting the real deal, not just an easy one. Comment builder, and I'll walk you through exactly how to compare the two side by side. Follow for more no BS mortgage talk. That's a lot of interesting stuff. Even if one thing I share on here saves you time, money, or a headache, then it's worth making it and sharing it to you. Here's my ask. Drop a comment and tell me which topic that I've shared has helped you the most or what you want me to cover next. Real estate pros, share these topics with a client who needs it. And if you want to be in a future video, I'm interviewing real estate professionals about these exact topics, so reach out. You can follow along with me on Instagram at shannonyoung.fsu, catch my seminals and real estate takes on X, and hang out on YouTube where we can all learn and grow together. Ready to get pre-approved or just want to run your numbers? Go to loansforknowles.com and I'll personally get back to you today. I see every comment, answer every message, and I love being in your corner. See you in the next one.